Welcome back. You're watching Stock Watch this weekend. Joining me to unpack your stock-related questions this afternoon is independent analyst Jimmy Moyaha. Start sending us your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, Jimmy. Of course, we have to start off with Anglo American. That's really the biggest thing on the JSE right now. And of course, people have been asking about Amplats as well, if they should sell Anglo and buy Amplats. So there's just quite a lot. But really, the big thing that we got today was that a rumor. It's still a rumor right now. That Glencore is having internal talks, considering buying Anglo American. And I'm wondering how you would be viewing that.
Good afternoon, Zinati. Good afternoon to the viewers. Let's start with that. The conversation, the fact that someone like BHP went after the Anglo assets in the first place was a very telling picture. And it was only a matter of time before another giant in the mining space thought, hang on, we could probably do something with that as well. So I'm not surprised.
You guys didn't tell us this though soon enough, because otherwise we would have been in there speculating.
So this is the thing. The speculation is what happened with Telkom and the MTN interest. Remember what happened there?
Yes.
You speculated all the way up to 50 Rand for Telkom. Telkom's now back at 24 Rand. Exactly. Markets are not jumpy as they should be, and that's a good thing, right? That's something we've learned the hard way in the past, and people are looking to avoid those same mistakes. Right now, there's a Canal Plus takeover offer on MultiChoice. 125 Rand offer has been made. The share price is yet to hit 125 Rand in trading because markets don't want to get ahead of themselves. So even if we had this conversation, and I did have this conversation with a very good friend of mine in commodities portfolio manager around the fact that does this now then interest other players? And absolutely, if there's a good asset and it's at a discounted rate and you know that you've got the balance sheet to be able to do it, why not do it? Why not have that interest if it lines up with your business? So the thing with the mining space, and what's particularly interesting about that is you don't necessarily have new mining opportunities where you say, okay, there's a piece of land, we're going to go mine there. So a lot of the mining companies, you can go through the effort of doing an environmental impact assessment and all the other things that are required. It is. So what's easier? Buy an existing operation that's got existing infrastructure, existing shafts and equipment and everything that's been deployed, that's got revenues that you can measure, and you've got a balance sheet to then bring that revenue onto your balance sheet.
You don't want to be Bob the Builder.
That's it. So, and that's what you're seeing with the mining space as well. It is much easier to just go that route. What that does mean, though, is that there's going to be fewer players in the long term in the space, because you're going to have a Glencore competing with a BHP as you have here, and there's no third Anglo because they've bought it out. So definitely interesting developments. Not surprised at all by the rumors that are circulating. I had this conversation probably last week, shortly after the announcement and just before the rejection by Anglo. So the day the announcement went out, I think I had the conversation to say there could be other bidders at the table. I hope I didn't start the rumors. Gosh, I don't think I did. But it's no surprises here.
If you did, Bloomberg was listening. But just on that, because now it spills over to what do you do as an Amplats and Kumba Iron Ore investor, particularly Amplats, because obviously of the dynamics that we have seen in that PGM market. Because now Amplats has just been going further into the red, and people are asking, well, since now I've made so much money on Anglo, should I just take some profits and then go into Amplats because it's so cheap? But then there's also this thing that if this deal goes through, then Amplats might experience further pressure. What do you do as an Amplats shareholder at this point?
So as an Amplats shareholder, I'd imagine you would have gone through the pressures that you've gone through, and you've got a view on the platinum space and on the PGM space. As an Anglo American shareholder, you might have a more diversified view because Anglo American does still have interests in both Kumba and Amplats. I think it's 70% in the one and 72 or 73% in the other. So you've got north of 50% interest in both the spin-off companies that have happened. So if you're an Anglo American shareholder and not an Amplats shareholder, you chose to stay in the parent company because of the diversification. So now you need to make a decision to say, fine, am I going to leave that for my exposure to now be isolated towards Amplats alone? Because when the spin-offs happened, you had the option to take that route. And as a shareholder, as an investor, you elected not to for whatever reasons, right? Those are the reasons you need to be addressing. I can't tell you whether or not it's better to be in Amplats or Anglo American because I don't know what decisions were made in the past. And we also don't know the terms that the deal's going to go through on, right? So it's very important. BHP's made it very clear that they have a particular interest or a particular focus that they're looking at, and they're quite happy for the remaining assets to be spun out cleanly, given back to the shareholders as they are, and sort of separated quite nicely. They mentioned, or there's conversations that they'll come back for those assets later. No guarantee that they will do that. If we look at the picture from a third-party point of view, might also look like they don't want exposure to South Africa just yet, because they could take everything lock, stock and barrel and have a conversation around that, but it seems they're very focused on what types of assets they're after within that stable to complement their existing portfolio. So it would be very premature to jump ahead of it and say, I'm going to take this decision because this is what BHP is going to do, unless you're on the BHP board and you kind of know what they want to do.
Depends on what your investment thesis really is at this point. Well, let's zoom into South African exposure in the mining sector. Lots of people have been asking about Copper 360. Of course, a lot of analysts not really keen on Copper 360 because it is still an exploration company. We spoke about the difficulties of building that. So could you ask Jimmy his opinion and insights on Copper 360? Yes.
I think you hit the nail on the head with the exploration aspect of it. It's very much like a Renogen, where you proved phase 1, you're now going into phase 2, you haven't been able to deliver on the helium, and that's the problem right now. Copper 360, interestingly enough, I spoke to Jan Nelson, the CEO, and they said they were able to get copper concentrate out of the Northern Cape for the first time in 21 years. Now, that is a step in the right direction. The share price is really, really low where it is at the moment. We actually spoke about what production looks like, how many tons they're going to be able to get out once it's operational and all of that. And I think because you're dealing with an an exploratory company like that, it's almost looking at it from a frontier market perspective. There's a lot that still needs to be proven and delivered upon and all of that to ensure or to reinsure investors of the confidence of what's there, right? And if you're looking at it, what's interesting about it is copper as a metal is almost 90% recyclable, if I'm not mistaken, if not more than that. What that then means is that it's going to become a very attractive commodity, especially if we look at things like the EV conversations we've been having over the last couple of years and where that is going in terms of direction, and the alt metals that are looked at from there, copper, nickel, cobalt, those sorts of metals that are looked at from a battery and EV play. But they're also they're considered to be your cleaner metals because of the recyclability and the repeated use you can get out of them. So it's very interesting that a company like Copper 360 is able to tap into something like that. Whether or not it's a good time to invest here, I think it comes down, again, investment thesis around exploratory markets and new kind of spaces. Some of the investors prefer to wait until we're further along in terms of...
A lot of investors.
That's it, right? So very few investors are looking at risk at this point. And the investors that are looking at risk at this point are then obviously the ones that are rewarded by getting in at less than 4 rand a share.
Of course.
So each comes with different up and down or pros and cons to it. And it's very difficult for me to then say so my thoughts on it are, if we get the proofs that we need, and again, the proofs are dependent on what we get from the company. Again, a company like Renogen, where I've also in the past spoken to Stefano Morani around production and what's been the delay. Simon Brown's spoken about it at length as well. And we've looked at companies like that, and you've got shareholder interest, you've got investor interest up to a point and up to certain things. The Copper 360 guys have made it very clear they've got no intentions of delisting. I asked the question, so they're going to be around for quite some time. They're going to focus on production, and it might be worthwhile if someone wants to look at an alternative look into mining and maybe not concentrate into what we know as PGMs or what we know as the traditionals that South Africa is known for, because those have been under pressure of late. So might be a good alternative investment to keep an eye on.
Okay. Woolworths, a buy or a sell over the long term?
Difficult for me. I wanted a buy below 55 Rand. We bounced off 55 Rand. We're probably at around 60 Rand last I had a look at them. So I know that there's a lot there. We went up to 80 Rand, right? So at 60 Rand, we went up to 80 Rand. We came down, we broke below 60, and that was, for me, a sign to say we might get lower pricing because a lot of our stocks have been under pressure. But we bounced so nicely off of 55 Rand, and now we're sitting at 60. I think we might see a bit of sideways movement at the moment. And this is looking at other retailers and how other retailers are performing, right? So Woolies has kind of been consistent within that 80 to 60 Rand range for a long time, has been range bound in that 20 Rand range there. And if you look at the likes of Pick n Pay, we've discussed that at length, we're at 20 Rand there. Spar's come down quite a bit. It seems to be coming back up to around that 100 Rand range, but we did dip below 90 Rand there. If we compare it to ShopRite, I think the last time I was on the show, I was chatting to Nolutando about ShopRite, and I said, if you're in the range of anything from 220 Rand down to, or from 240 down to 220 Rand, it's a good buy opportunity. And we bounced off 215 Rand straight up to 250 Rand. So that was a clear indication of the strength that sits within that share from an investor confidence point of view. And that was just in the month of April. So Woolies at this point, if you're holding, might be worth continuing to hold. I don't think we'll break significantly below 55 Rand, but I'd wait to see from that perspective if we do, if you're not in it already. If you are in it, I haven't seen any reason that'll say we'll break above 80 Rand at this stage. So you could, again, sideways trading between 60 and 80 Rand, some range-bound trading for the meantime. But that could also be some consistency as well if we sort of see predictable movements. Haven't had a look at their dividend yield in a while, but that's, again, I'm not expecting us to break above 80 Rand anytime soon.
Well, let's go into something that is unpredictable. Even more unpredictable. Transaction capital.
Oh.
JP Verster has a buy here. What's your take? And he's actually he's been in there. I think even when the crash was starting to happen, he was in there. And I actually checked, I think, a few weeks ago to see if he changed his mind, and he hadn't. But yeah, what is your take?
If you haven't been in transaction capital, you might be getting it at a bargain. It might be a good time. You haven't gone through the pain that someone like JP has gone through as an asset manager and as a portfolio manager.
I mean, even me as a retail investor, I've gone through a lot of...
There's been a lot of emotions that have come with that stock, right? So if you're getting in now below 3 Rand, I think last I checked it was 2 Rand 96. I think we're just above 3 Rand at the moment, or around that range. I spoke to, I think I spoke to Chantal Marks about it when we were unbundling. The unbundling of the WeBuyCars, and we kind of anticipated would land around the 3 Rand something range-ish. The dip below 3 Rand, though, was a bit of a, is the market, pricing in something else? Are they seeing something else that they shouldn't be seeing? But we kind of expected would land here after we got out. I think we were at 10 Rand a share at the time of unbundling. We expected about 6 Rand 10 cents or so to be allocated towards WeBuyCars, and we got that. So we should be maybe closer to 4 Rand on transaction cap at this stage. But if you haven't gotten in and you're looking at it now, it might be worthwhile. There are things to consider. You have to consider the SA taxi business, the state of that business, how they plan to recover that business, because that has been the biggest headache of that business. And this is the conversation we had prior to the unbundling to say, after WeBuyCars, which is probably the best asset, what does the business then do? If you're not in the company just yet, I would wait to see what management comes out with, because management has been very confident in how they intend to turn the business around. We saw some of the founders are now returning to management and to the actual day-to-day involvement, including positions like the CEO, to actually get the ship back to what they founded the business as. While
we're there, there's a question on WeBuyCars. I noticed that Stockdale Street increased their holding to 6.02%. They represent the Oppenheimers, who are no fools. It had good results and closed at 20 Rand 85. When was that? Yesterday. It looks like it settled around there. So WeBuyCars, would you be following the money there?
So I saw the listing, the unbundling. We kind of dipped below 20 Rand at some stage. We were at 19 Rand something.
Okay.
We didn't dip too much
Yeah.
below that. I don't think we got lower than 18.50 on some exchanges. But in terms of the share price and where we're sitting at the moment, I think the company at 20 Rand came in higher than what we thought. They said we were going to come in at 18.75. We came in above at 20. Fair market value of it might be around 25 Rand or so, so there might still be quite a bit of upside there. I think you're struggling with a South African economy that is a different picture. That's putting pressure on South Africa Inc. and South African stocks. And so you might not see a flurry of investment into it. But at the same time, if we're looking at positioning a portfolio from a long-term perspective, you might want to get in now. You might want to say, this is the listing price. This is as low as it's gotten. We're kind of comfortable at this. You're getting in at almost a base price, and you've got all of that upside because we don't know where the upside is. We don't know where the upside is going to get to. It might take a while to get there. So don't buy now and then say, Jimmy said buy on Friday, and by Monday the stock price is not at 40 Rand and I'm the one at fault, you know? So understand why you're getting into something like WeBuyCars. Understand how many cars they sell a month, whether that rate is sustainable, what the market looks like, because at the end of the day, they're selling to South African consumers, aren't they?
All right.
And if South African consumers are under pressure, that changes the picture as well as to whether or not they're going to purchase vehicles. They might purchase some consumer. We've already seen the trend away from purchasing new vehicles because of the price point and the interest rate there. So it might be more affordable for the second-hand market as well, which could serve WeBuyCars quite well. So
well, let us go to your stock pick for today.
Going to keep it simple this time. A bit of a daring pick. We're going with Alibaba. Stock price has come quite a way off of the pandemic highs. Pandemic highs were north of $300. We're down to around $80 or so. We could come down to around $75. What I like particularly about that is we bounced off of the sort of pandemic lows, and we put a nice low structure around the $60 range. So you do still have downside down to $66, $65 a share there. But I'm seeing a good bounce up from those lows, some sustainability. And if you're going to take a play on China, and I'm looking at the fact that at $80, again, downside $15 or so, but upside north of 300% if we go anywhere back to where we need to get to. And the company's doing well at the moment. They're always innovating. Jack Ma's endorsed the current management team, so you might see that that brings a bit more stability. The catalyst there is going to be the Chinese government, absolutely. We're under no illusions about that. We know exactly what they're doing, and if they then provide the stimulus that we think that they might provide into the market, or we expect that, you could see that a stock like Alibaba could be consistently running up for a number of years from now. I particularly like that we double bottomed around the $65 range, and we've sort of pushed up from there quite nicely.
Well, some are already seeing upcoming bull market there in China, calling it the China Renaissance. So we'll see how those stocks perform. Thank you so much for your time, Jimmy. That was independent analyst Jimmy Moyaha.